welcome. Today we're going to discuss InfoEdge India Limited and try to understand why the stock is expensive. In fact, if I go to the charts and look at the last few years, it's always been expensive. As a matter of fact, between 2007 and 2011, there has been zero earnings, right? No profits. And from 2011 onwards, when I started making some profits, it was still valued at a very high average price to earnings ratio. You can see about 60 here, and then for some time it drops to 40 and then picks up again in 2014 and 2015 and goes all the way till 150, 160. And then again, there's a period of time where there's no profits, and then some profits, but still richly valued, no profits, some profits, and again, no profits between 2019 and 2021. And then there's a huge bump in profits or earnings per share, you know, and that brings down the price to earnings ratio to about 17 to 22 range. And then again, it shoots up more recently, and then it goes back to its historical average, which is now kind of settling down in the 60 to 70 range. So the question is, why is it so expensive, and why is it valued so richly? Even though there have been lots of periods of time where there was actually no profit, right? If you look at the share price hasn't dropped in those periods, right? So even when there was no profits, the share price kind of maintained and has given a decent return for anyone who's been holding this for a longer term. So the question is, why is it so erratic in terms of valuing? Why is the market so erratic in terms of valuing this business? So to understand that, let's look a little deeper into InfoEdge. So InfoEdge, they are primarily into online classified business. Uh, it's an internet-based service wherein they offer classifieds for recruitment, which is through Naukri.com, uh, for matrimonial, which is through Jeevan Sathi, real estate through 99 Acres, and educational services through Siksha.com. So this is their core business and makes up for majority of their revenue and income, right? Now, within this online classified business, 95% of revenue, no, close to 90% of revenues comes from what they call as B2B business or business to business, right? So about 10% comes from B2C or business to consumer. So here again, we see, because it's a lot of B2B focused, it is going to get impacted when there's an interest rate hike or when there's any change to the macroeconomic conditions, right? 10% revenue is more of a B2C, which is more predictable and gives more visibility, because just because you have a lot of small chunks of revenue coming from several small customers, right? So that in design kind of makes it look a little better. So that aside, we look at the other part of InfoEdge, right, which is their financial investments, right? So if you go back to this chart and if you see this lumpiness in the uh, earnings, now this is the time when they sold a part of their holdings in Zomato and Policy Bazaar. And it's also the time when Zomato and Policy Bazaar came out with the IPO, right? And InfoEdge actually sold some part of their shareholding in the IPO, right? So that is what is showing up here as earnings, okay? And after that, you see it's back to regular operational income, right? So now, Zomato and Policy Bazaar are just the ones that got a successful IPO, and they still, they still retain shares in both these companies, and that's still on their balance sheet. And they also have investments in a number of startups that is unlisted, right? So there is a certain amount of value to this because these startups have grown over the years. They have added more customers, they are generating revenues, and they also diluted their equities. But all of this kind of remain on the balance sheet of InfoEdge as an investment. And then last year, they also started what is called as an AIF, or an alternative investment fund, right? Now, think of it as more of a fund for venture capital activities or private equity investments, right? So essentially, what InfoEdge is doing here is spreading across its investments in a number of different smaller startups, and a number of these investments will actually go bust. These companies will go bust, they will fail, and that's by nature how startups work. But one or two of them might make it big, and that can more than make up for all the losses that they have suffered, right? So the gist of the discussion here is that it's extremely hard to value a business such as InfoEdge, because what you see from the outside is Naukri.com and their online classified business with an operational revenue and with its own problems and also advantages. But they also have this financial investment spread across different types and categories that makes it extremely hard to value it as a business. All right, so I'm going to end it here. It's been a longer video. Stay tuned for more. I'm going to do a few more videos that will go deeper into the InfoEdge business model. Thank you.